You're listening to the Scotiabank Market Points podcast. Market Points is designed to provide you with timely insights from Scotiabank Global Banking and Markets leaders and experts.
Welcome to Market Points. I'm Patrick Bryden, Managing Director and Global Head of Thematic and Sustainability Investment Research at Scotiabank. Thanks for tuning in. Alex de Vries-Gao is the founder of Digiconomist, which seeks to highlight the unintended consequences of digital trends, and his work has been featured in academic journals as well as widely quoted in media such as the BBC News, the New York Times, and Newsweek. With Alex's insights, we will dig into how he has endeavored to quantify the growth in energy usage for AI and how we should think about the implications from ongoing momentum. Obviously, these matters are complex, and I'm delighted to have Alex join us to help us simplify and understand the key insights from his work.
Thank you for having me.
So we're in Amsterdam today, and I want to thank you for taking the time to meet with me in person. I'd like our audience to get to know you a bit better, so can you please tell us a little bit about yourself?
Yeah, of course. Well, I've been doing research in emerging technologies for about a decade now. I first launched my website, Digiconomist, back in 2014, and I initially started writing about the risks of investing in cryptocurrencies, but then that quickly evolved into writing about the sustainability of digital assets and later just the sustainability of emerging technologies as a whole. Most recently talking about artificial intelligence, of course. Yeah, you can say this hobby got out of hand tremendously because it's not just a hobby anymore. It evolved into more than a dozen academic research papers. I'm doing a PhD on this topic as well. Digiconomist itself is no longer just a website. It's also my own private company. So yeah, I've been working and answering questions about emerging tech sustainability for a very long time now.
So let's jump into the recent article you published. For our listeners' benefit, it's called Artificial Intelligence, Supply Chain Constraints, and Energy Implications. And that's in a peer-reviewed scientific journal called Joule. What was it that you were going after here?
Yeah, well, that's very simple. I was just trying to highlight or find out the total power demand of AI globally. And that was really what I was looking for. And I managed to find it. So
I love how the article starts, and I think that I can really relate to this through our work at Scotiabank as well. But initially you highlight that there's kind of an opacity issue. So there's an evolving nature of corporate disclosures here, and then there's also, in parallel, an evolving nature of government regulations with respect to AI. And I'm wondering if you can give us a sense for the current state of play you're seeing on this front and the challenges of analysis that it creates.
You could think like, hey, this should be an easy to answer question. What's the total power demand of AI? Because what's happening is that these tech companies are using specialized equipment to work on these applications. And they know exactly how much of that equipment they have, and they know exactly how much power that equipment is consuming. So it could just be a matter of them publishing this information, like, hey, our AI servers are consuming this much power. You add this number up for all of the big tech companies, and you will have a pretty good indication of the total power demand of AI systems. Well, yeah, things could be that simple, but of course they're not because they're not disclosing these numbers. So
Right.
If you look at the environmental reports of the tech companies, they will disclose their total power demand and they will point to AI as the reason that their total power demand is increasing. So we can see their total power demand is going up. But then they never specify what part is due to AI. And they even explicitly state like, yeah, we're not going to provide this information. We don't find it meaningful or whatever reason. And that's a problem because if they're not giving this information, you need to start thinking about other ways to obtain it. And they are giving strong signals that the numbers involved are big. You can, first of all, establish that the total power demand of these tech companies is increasing significantly. And as they're pointing to AI as the reason for that, that's one important signal.
For sure.
You also see media headlines appearing that these companies are having real trouble finding enough power capacity to power their demand for their AI applications, essentially. Google was even talking about a power capacity crisis at some point.
Yep.
I think Sam Altman is commenting all the time, like, hey, we don't have enough power to continue developing AI.
Yeah, for sure.
These are very strong signals that numbers are getting out of hand very fast, but we're not really getting the data from the tech companies themselves. So they're big, but we don't know exactly how much. So we need to find this out in a different way. And that's what I've been trying to do.
I really love how you went about that. Like, to me, that's what's very attractive about the work is at a high level, you have, or we have a challenge of not necessarily enough corporate disclosure. And it's not always that we want more and more disclosure. It's we want better disclosure. And then we have government regulations that maybe aren't also dovetailing with that to give us a complete picture of what the AI power draw is. And so the manner in which you've attacked this is to go bottom up.
Yeah.
And as you've outlined, the information that you can get from Taiwan Semiconductor Manufacturing Company, or TSMC, you triangulated that with what NVIDIA does. And I think you also mentioned AMD, where I think you were able to piece together over half, maybe approaching 2/3 of what you needed to know about the bottom up kind of almost physics of what's creating the power draw. So maybe walk us through how you kind of gross that up when you think about Google and others to get a complete picture of AI systems.
Yeah, well, there's indeed, when you look at NVIDIA and AMD, it's quite easy to get information regarding their chip design because, these are publicly available devices. Anyone can buy them. Okay, they're not cheap, but you get the picture.
Yeah.
But there's also custom solutions like Google's tensor processing units. They are, they're in-house things. They don't sell these.
So we can't see what that really is in the same way that we could see TSMC, NVIDIA, AMD, right?
Exactly. It's a bit of an issue. So how we know that Broadcom is taking a lot of TSMC's packaging capacity, which is ultimately used for Google. So Broadcom is Google's partner for making their tensor processing units. We can estimate how much NVIDIA and AMD are using, and then we don't have any good insights in what's happening at this other, like maybe 40%. But the thing is, when you look at the 60% we do have available, you will notice like everything there is maximized. So the chips they're using their maximum dimensions. They're making these chips as large as possible, and this is a certain thing that is likely also the case for the part that is not visible. At some point, it becomes pretty likely that ultimately, if you can figure out the 60%, if you want to get to 100%, if you have the power demand for that 60%, it likely just correlates with ultimately the power demand ultimately correlates with the packaging capacity that's available,
right?
Simply because everyone is kind of using similar specifications for the chips that they are making.
I guess what's really interesting to me is how you connect that to the power. So once you've illuminated the fundamental building blocks from your bottom-up work, I think it'd be very helpful for our audience to understand how you then further built this up to imply the complete picture for AI and what the estimated power demand is in recent years today, as well as when you look out in time. And I guess I want to add that I particularly appreciated how you tried to relate these figures in scale. So you give us a sense for what do these numbers look like as a component of total data centers globally. You've touched on Bitcoin mining, and so you've been able to relate it to the size of that. And then I think what's very tangible for a lot of the readers would be just the entire power draw versus the demand picture for various countries.
Well, essentially, if you want to get numbers on the AI power demand, it could be as simple as just aggregating the number from provided by the big tech companies. If they did, they know exactly how many of these specialized equipment they have, like I said, and they could provide it, but they don't. So you need to take this massive detour. But then, okay, once you do take this massive detour, like I did, I was able to find out the power demand of AI by the end of last year was already as much as, well, my home country, the Netherlands, is consuming.
Amazing.
And then you're talking about a number, that is already 20%, represents 20% of global data center power demand. And this is a huge increase, thinking about, this happens in a 2-year time span. Like the AI hype started like at late 2022, start of 2023. And 2 years later, AI is responsible for 20% of global power demand. And then I was also able to kind of look forward already a little bit, because we already know what the packaging capacity of TSMC is going to look like this year. And we can already say something about, okay, this might mean that if the supply keeps being utilized in full for this whole year, then by the end of this year, we're not going to be talking about 20% of data center electricity consumption anymore, but we're actually going to be approaching half of data center electricity consumption. And just during the course of this year, we'll add the Netherlands,
right,
in power consumption for AI. So that's actually that's massive. The International Energy Agency was also recently doing some numbers on this, and they were highlighting like, okay, in the coming years, data centers are going to be growing to a point where they'll be responsible for 3 to 4% of global electricity consumption. They were still a little bit more optimistic on AI energy consumption. They kind of put this at like 15%, but then if you dive into like how do they get to 15%, you can't really tell, because all the sources they use, everything is like it's based on proprietary information from all kind of different analysts, and then you can't really do any
back testing.
You don't really know how things work over there, and also the trend that they show does not match like confirmed statements from TSMC. Like if TSMC says, "Hey, our production capacity is doubling this year," you expect that power demand at the end of the line is also going to be doubling. But in any case, the International Energy Agency, they did say like, okay, AI is going to be a primary driver. And I think if you look at my research next to that, you'll figure like, okay, that's true. And actually things are going to be worse than anticipated, simply because the growth in AI is actually faster than what was outlined by the International Energy Agency, especially if we already get to AI representing half of data center electricity consumption this year. By the way, when we're saying half of data center electricity consumption, I do want to emphasize that this is data center electricity consumption excluding cryptocurrency mining. So that's also still happening on the side there, and it's also still significant. So if we look at, for example, Bitcoin mining today, Bitcoin is still responsible for consuming 200 terawatt hours of electrical energy annually, which is by itself also close to half of what data centers were consuming last year.
Yeah, and again, in terms of country scales, it was approaching, probably 2/3 of the United Kingdom and maybe half of France, something like that.
Yeah, indeed. If you're at 200 terawatt hours of electrical energy consumption, you just consider that like the UK is at like 260 annual energy. So you're getting pretty close to that.
Yeah.
And then total data centers, again, excluding cryptocurrency miners, were like 415. If you add another 200 on top of that from crypto mining, you're already at more than 2 times the UK in total power demand for data centers. So including AI plus cryptocurrency mining, and this number is just going up really rapidly. So this is also why the International Energy Agency was outlining like, hey, if this growth continues, just a couple of years, all of this will match the power consumption of a country like Japan, right? So we're going to get there really soon. And that's really wild, because if you think about data center power demand during the previous decade, it's actually been extremely stable. And if you take out cryptocurrency mining and AI, it would actually still be pretty stable today.
When we think about environmental implications, what do you think the consequences might be? I mean, we're living in a world where there is concern about emissions, water stress, droughts, extreme weather for that matter. How do you think about this as you've stepped through the work?
So It's actually really hard to make the immediate translation to environmental consequences, simply because once you have a number for the total power demand of AI, putting a number in terms of carbon emissions on there or water consumption is going to be very hard, because we still don't know where these servers are ending up at. And of course, it matters a lot. Hey, if your servers are going to be powered by a combination of solar and wind, it's a completely different story than when they're going to be getting power from a coal-based power plant.
Right. The backing of energy grids differs by jurisdiction.
So you can't. It's not easy to put a number on this. You can make some generic statements about what is likely going to be happening here, because as we are boosting our total power demand, this is taking place on a grid where renewable energy capacity is limited. First of all, our total power capacity is limited, and then the renewable percentage of that is also typically a smaller share. So in Europe and the US, I think if you look at the power grids on average, you're talking about like 20-25% renewable energy, and we are prioritizing those renewables. So we've already been in an energy transition for the past years, and that means we use green energy as much as we can. But if we are facing a sudden increasing power demand, that also means that increase is not going to be powered with renewables, because we're already using those as much as we can. And that typically means that we're going to be using the infrastructure that we've been trying to abandon in recent times, which is still available for use, being fossil fuels, to power this additional demand. That's the backup source that we have. So this is just a very generic effect of any major increase in power demand. Typically increase our short-term reliance on fossil fuels. There's also a lot of water being consumed to generate that power as well. So if you're generating power from fossil fuels, you're also using cooling systems. And actually, I think it's very common to use at least a liter of water to generate a kilowatt hour of energy. So that actually means that if you're increasing your power demand by a lot, you're going to be using fossil fuels to meet that demand. You're not just increasing carbon emission, but you're also increasing your water consumption at the same time.
Mm-hmm. When you think about those consequences, I mean, obviously there's local considerations as well. So, I know you've thought about this a little bit as well. How would you contemplate that?
Yeah, data centers can have quite an impact at a local level. I think a very obvious consequence is typically the energy prices are going to go up, and this is simply due to the laws of supply and demand. If your power supply is limited and suddenly your power demand goes up, energy prices go up. This is very basic economics, but that's one thing. Another thing is that depending on the situation locally, if a coal-based power plant is being revived for powering the data center that happens to be put in your backyard, think about what that means for local climate targets. You're probably going to be facing additional consequences from air pollution simply from being near the source of power generation. It's the difference between not having the coal plant running at all or having it put all kinds of dangerous substances in the atmosphere, and not just CO2.
When you think of mitigating these issues, how can we seek to manage them and sort of take care of some of these effects?
Yeah, that's the question. So what do we do about it? But then the thing is, what I've been telling a lot of people about is that, well, if you want to start doing something about it, you really need better data first, because it's really hard to make good policies if you don't really know exactly what's going on. You have to make a massive detour just to be able to figure out what is going on at a global scale here, but what does that mean for your local policies? As long as you're not getting better data, I think it's really near impossible to make any good policies about it.
Yeah, I would echo that. I mean, as an analyst, and it's not just this issue, as I said before, it's not always we want more data. We want better data. We want useful information. Yeah,
exactly. And it could be, well, I've already explained this during our conversation. It could be very simple. The tech companies have exactly what we need at very granular level. But they're not providing it. So, the obvious thing to do would be, making sure, encourage those companies to start providing this information. There was one company that did a couple of years ago. Google published some numbers on their AI-related power demand over the years 2019, 2020, 2021, and they published this in 22. This was the last time they published this type of information before the AI hype. And then they said a few things. They said, first of all, like AI at the time was 10 to 15% of their total power demand. Extremely useful information, by the way. But they also specified that 60% was for inference and 40% was for training of AI models.
Right.
This is the only concrete number we have, and we don't know how this is evolved. We do know that ever since there's been mass adoption of AI, and now everyone's using this model. So it's highly likely that the percentage had the weight on the inference, which was already responsible for a majority before the AI hype, is way larger now. So now we're maybe talking 80, 90% energy consumption from AI in the life cycle of an AI model, and only maybe 10 to 20% due to training. So if you're going to be mandating disclosure on that training cost, you're only going to get a very minimal part of the total picture. And that's when this regulation finally starts applying. So it might be soon, it might be taking another 2 years. And the rest, the inference part, that's left to voluntary disclosure. And we already know how that's going. That's not going well.
As companies are maybe signaling that they want to reduce emissions and get to net zero or some interim milestone, those charts kind of go down and to the right. And then if we're looking at the trend of increased energy intensity due to a busy economy, due to global conflict, due to geoeconomic pressures, et cetera, and then we've got Bitcoin and AI layered in on top of this, those pressures on those emission numbers for a lot of the big tech companies are going up and to the right. So they're going in the opposite direction. What do you think gives there?
Well, this has been very obvious. I mean, all the big tech companies are reporting like increasing carbon emissions. While they have net zero goals in 2030, coming from 2020, they only managed to go up in terms of carbon emissions rather than going down to their net zero target. I think this is a very clear indicator that growth is just being prioritized over the environmental performance here. This type of stuff is putting pressure on the emissions reporting of the tech companies. It's not just the operational power consumption. Also think about the carbon cost of manufacturing this hardware in the first place, the Scope 3 emissions in their environmental report, which are also really big. Also think about the construction cost of data centers. Constructing data centers in itself is also a big environmental cost. Obviously, we don't know what is the ratio between all of this because we're not getting that type of disclosure. So, but we do know that this is all contributing to why the numbers that are being shown in the environmental reports of the tech companies they're not good. The carbon emissions are going up. And if you read the environmental report of the tech companies, they will say like, don't worry about it. Yeah, we know the numbers are going up right now, but we're working on making the hardware and software more efficient, and also AI is going to contribute to a better planet, so that will offset the extra cost that we have at the moment. Those are the very typical excuses that we see. I say excuses simply because there's a lot of wishful thinking. We can see that there is a real world impact right now. This is obvious from the numbers.
Yep.
And then this might be compensated later with some to be developed application. No guarantees. Even if that is the case, you always have to consider rebound effects. We can always make things more efficient, but
yes,
making goods or services more efficient also typically has an effect of increasing demand for goods and services. So,
right.
And we call it the Jevons paradox. When your total resource use ends up being higher than what you started out with due to the increasing demand. This is actually a very typical.
Right. And for our listeners, to make that tangible, it's like if you put up Christmas lights and you get more efficient lights, the answer typically for most people wasn't to just use the same amount of Christmas lights. In North America, you'd use way more.
Yeah,
right.
Yeah. Consider that we are also seeing this Jevons paradox at a massive scale in AI already, because in the past few years, it's not like the hard and software for AI haven't been getting more efficient. Actually, they've gotten a lot more efficient.
Yep.
But at the same time, the models that are being used, they went from millions of parameters to billions, and now we're even going to trillions of parameters. So we're using the efficiency gains to make the models bigger, better, because bigger is better in this case, which has also triggered mass adoption of this technology because, hey, these models are now performing good enough that a lot of people want to use them. This combination is what's driving up the power demand of AI to the numbers that we're seeing today. So it's actually because of the efficiency gains that we've had in recent years that AI is now so as successful as it is and going up in numbers so fast. So let's not put too much trust in that efficiency gains will just make this
so human behavior is such that if we find efficiencies, we don't do the same or less with that original input. We do more.
Yeah, exactly.
We consume more because there's more capacity to do more. It strikes me as a really interesting time when we think about the big tech companies, because I think that in many respects, a number of them deserved a fair bit of credit for trying to show leadership in some of their ambitions in dealing with these environmental issues that they're moving along with. We had companies signal that they wanted to reach net zero. We had some even take it further and say they want to reduce historical emissions to go to like a net negative number. And obviously, as you come down the path, life is always more complicated than you think. And you have, the Russia-Ukraine war, you've got inflation, you've got this emergence of this technology. So I find that some of those big tech companies are now trying to reach for other options. We've come from a world of, let's call it energy transition, to what's now referred to by many leaders as energy addition, where, as you touched on, if it's not just a case of powering this with renewables in an ideal world, then we need to bring in other forms of energy and traditional forms of energy like natural gas or oil or coal. How do you think that these companies are going to manage this? I mean, I think some have signaled that they are taking steps to move into nuclear, trying to find other forms of power. Is there a solution here that's obvious to you, or you think it's going to be pretty challenging?
The thing is, you can think about nuclear power, but realistically, nuclear power, if you happen to have a nuclear facility that's ready to be revived, then maybe you can use that. That's a carbon-free electricity source. But think about what does it mean to revive a nuclear facility. The reason they get closed is because they're outdated. No, this is already not easy.
Takes a long time to build them. We've done some pretty detailed looking at those patterns, and you cannot snap your fingers and build these things.
No, I mean, this is indeed, you can talk about reviving nuclear facilities that have been shut down. There's not much viable candidates for that. And then you can talk about building out new renewable infrastructure, which is, is very expensive too. It takes a very long time to build out this infrastructure. So in some cases, it can easily take a complete decade to just complete a construction project like this. At some point, we saw Sam Altman in the U.S. Advocating that the U.S. start investing in a certain number of 5 gigawatt data centers. 5 gigawatt, that's the complete output of a nuclear reactor. I mean, where are you going to put that? If you look at a power grid like Texas, you're talking about a power supply that's 80 gigawatt, but that power grid is extremely strained. It's not like they can just, you can't really fit anything more on it. They're already having capacity issues at certain times of the year. So you're not going to be able to fit in an extra 5 gigawatt of power demand, and no way.
You participated in our sustainability summit recently, our 7th annual. Really appreciate you taking the time to do that. One of the things you hit on that I thought was really well said and really kind of eloquent was that when you look at the usage of AI, and again, I'm going to use the umbrella term as you suggested, obviously there's a lot of different uses, but you see a lot of use cases where they're probably not necessary, right? Could you expand on that a little bit? Because I thought that was really interesting.
Yeah. Now, this is like a more general thing you can observe with all emerging technologies. Like when they appear on the stage, everyone gets super excited. They all have overblown expectations and they completely lose eye for all the costs associated with these new technologies. Just a couple of years ago, we had this with blockchain, and we were going to put a blockchain on everything, even healthcare. Completely ridiculous, But that's just what happens when you're in a hype. We saw Facebook go all in on VR. Called Meta for a reason now. It's not like nowadays we're using VR for everything, and I think everyone sees like VR. Okay, we definitely don't need that for every use case.
Yeah, right.
So more often, it's very helpful to when you're trying to innovate to just really take a step back and really think about like, what is the actual challenge we're trying to tackle here? Like, where's the friction in the whole system? And what's the best fit solution for there, given all the technologies that are available? Don't just go around with like, okay, now I have a large language model. Then it really becomes like, hey, I have a hammer. I start looking for nails.
Right.
Always try to take a step back. Responsible innovation is really, I think, trying to just find the best fit solution. And 9 out of 10 times, probably it's not going to be artificial intelligence, and 99 out of 100 times it's not going to be a blockchain.
Right.
These technologies have their own limitations.
Alex, thanks for joining us today. We're really grateful for all your insights, and we wish you well with your work here in Amsterdam and beyond.
Well, thank you for inviting me, and a pleasure to speak.
Thanks for listening to Scotiabank Market Points. Be sure to follow the show on your favorite podcast platform. And you can find more thought-leading content on our website at gbm.scotiabank.com. This communication does not constitute investment advice or any personal recommendation to invest in a financial instrument or investment research. This communication is provided for information and discussion purposes only. An investment decision should not be made solely on the basis of the contents of this communication. It is not to be construed as a solicitation or an offer to buy or sell any financial instruments, and has no regard to the specific investment objectives, financial situation, or particular needs of any recipient. The information in this communication is based on publicly available information, and although it has been compiled or obtained from sources believed to be reliable, such information has not been independently verified, and no guarantee, representation, or warranty, express or implied, is made as to its accuracy, completeness, or correctness. Past performance or simulated past performance is not a reliable indicator of future results. Forecasts are not a reliable indicator of future performance. Please refer to our legal disclosures on our website.